Hi, my name is Ben Nathan and I'm a Forexmentor live in the live trading classroom. In this short video we're going to go through the Swiss National Bank's removal of a currency floor, go through what happened, why it happened, and also more importantly what it means for you. Now, many traders are in panic as they go to their accounts and see that they now have a zero balance. We're going to go through what this means and of course how we can move forward from this event. So, on the 15th of January 2015, the Swiss National Bank shocked the market by announcing the end of their defence of the Euro-Swiss pair floor. We then went on to see the markets drop by thousands of pips in one go over a matter of seconds, and we've seen several brokers go into insolvency. So, what's going on? Well, first we need to understand what exactly the floor is. Firstly, it was all to do with the Euro-Swiss pair. The Swiss franc was generally seen as a strong currency and therefore was the go-to currency for traders to flock to when looking for safe havens. This would then drive the Swiss currency up and up. But this made things tricky. It would have a bearing on economic growth and also affect the Swiss importing to Europe and ultimately the rest of the world. So, the Swiss National Bank created the floor. The floor was basically a cap on the value of the currency at one spot 2000. Whenever the Swiss was being brought to the point where its value was headed towards this cap, the Swiss National Bank would pump billions of euros into the market to drive the value of the euro up against the Swiss, thus keeping the currency below that 1.2000 cap. This would then deter further investments and keep the rate steady. And as we've seen over the years, the Swiss franc has generally moved in unison with the euro. But that doesn't deter the demand. There's still traders in the background wanting to buy into that Swiss currency, but being deterred by the fact that the Swiss National Bank was keeping the currency down. Therefore, they were just waiting for the right moment. Up until a week or so ago, the Swiss National Bank continued to defend this floor despite the extreme decline in the value of the euro. So what the hell happened? Well, on the 15th of January last week, with no prior hints and no notice, not even a hint, the Swiss National Bank out of nowhere ceased to defend that floor and removed it. The market panicked and chaos followed. There was a massive sell-off on the Euro-Swiss, and we saw the Swiss itself, the Swiss franc itself, benefit massively as the market shifted thousands of pips in a matter of just seconds. So what exactly was the impact? Well, the move was so fast that many traders' accounts wiped out all of their margin. Brokers were therefore unable to end those open trades at the margin call level. This therefore was followed by trades being closed way below margin and left accounts with a huge deficit. Regulations state that the broker is responsible for this debt, and therefore many brokers simply did not have the funds to cope. That left them with no option apart from insolvency. So why was the reaction so extreme? Well, in a nutshell, the Swiss National Bank tossed the muck straight into the fan, so to speak. Rather than remove the floor sensibly and over a period of time, they just did it with no notice or indication whatsoever. And understandably, with the euro being in such a state already, and with the expected QE program expected to hit the markets, people panicked and sold off. So consider this, the world's largest buyer of a euro stepped away with no notice. It's only natural that other investors would be shocked and follow with no further thought, and would just get rid of any euro investments in a panic and flock to the Swiss. So the sheer manner in which the Swiss National Bank exited really showed the seriousness of their conviction. Panic sell-off on the euro. So what does this mean for you? Well, if you've been subject to the aftermath of this move and have seen your account disappear, don't panic yet. There are a couple of things to consider. If your funds were held in a segregated account as opposed to one big company account with the broker, which they should be, if you are using a reputable and fully regulated broker, then you should receive your money back in due course. It may take time, so the best thing to do is call your broker and ask about this. Just understand that you may have to wait to get spoken to, understandably. Secondly, if you're in the UK, there is a scheme in place called the Financial Compensation Scheme. In a nutshell, if a broker goes out of business due to insolvency, then accounts up to the value of £85,000 are covered by the scheme. You can go to www.fscs.org.uk to find out more. Not every broker has been affected by the chaos, so if in doubt, just make the call and ask them. If you were in the dollar Swiss or in the euro Swiss trade at the time, or any trade to that matter involving the Swiss, and were wiped out, then we're sorry to hear that you were victim to this chaotic, unforeseeable event. Unfortunately, there's nothing we can do to get that money back, and while it's no consolation for your loss, just keep in mind that if your account is deep in the negative, don't panic about that. It's not your responsibility to pay anything back to that broker. The broker and the traders are the victims here. Blame can only be placed with the Swiss National Bank. Brokers and traders all over the world will have had crippling losses as a result, and we can only offer our deepest sympathies at this situation. Final thought moving on. The verdict is open now in terms of where the true value of the Swiss should be now. Until that Swiss settles, you should really think about avoiding that pair, or any pair that involves the Swiss franc. If you're interested in learning more moving forward on how to trade technical and fundamentals on a daily basis in a live trading room, do check out forexmentor.com/live. My name's Ben Nathan. Hopefully I helped.